What's going on, everyone? Welcome back to Courtside Financial. Super important video for you guys today, so make sure you watch all the way until the end. None of this is financial advice, of course. Make sure you hit the subscribe button if you're new to the channel. Make sure you hit the like button as well, because that really does help the channel out a lot. So the stock market is pretty much the most dangerous place to be right now. PE ratios are extremely high. The majority of stocks are looking overvalued. There's no reason for the market to be at these levels when the economic data just keeps on getting worse and worse, right? We heard that in June, 30% of people did not make their housing payments, whether that be rent, whether that be mortgages, and people sought unemployment. Receiving these checks from the government has pretty much become the norm now. And not to say that it's not needed, because I do think we need to get money into the hands of the people, not money into the hands of these corporations who can fail as hard as they want to and just be saved by the government, which is pretty much unethical to me. We have to think about, where is the money coming from? The money is coming from the Fed, right? Jerome Powell. They're printing money at unprecedented rates. There's more supply of money out there, so that's going to make assets increase in value, whether that be real estate, whether that be stocks. So the reason why the markets have continued to inch higher is solely because of liquidity. The Fed can pretty much print as much money as they want to print, right? And they also crush savings accounts. So when people's money is not protected from inflation in a savings account, they start to think that there's pretty much no need to keep money in there. I need to put my money into an asset and hide it there, and that will kind of shield it from inflation, right? So they start chasing the yield. And that's why there's even more liquidity coming in from retail investors. We're seeing retail investors open up brokerage accounts at unprecedented rates, which is all this money is just coming into the market. People say retail can't move the market, right? Look what happened with Hertz. So there's all this fear and liquidity and money coming into the market. So now I just want to challenge you guys to think about what happens when the money printing stops. When the stimulus that we're getting out to people stops coming in. There could certainly be a correction, right? So in my opinion, there's a fairly good chance that this could happen. And my philosophy is that when there's so much uncertainty, then you shouldn't be moving the same way that you're moving when everything's crystal clear. So my investing strategy has changed because of this uncertainty. And I've been doing the same thing for these past few months. It pretty much just revolves around keeping cash. So there's two ways to look at cash. Some people say cash is king. Some people say cash is trash, invest it all. Cash is definitely king in the short term. Obviously, we know what inflation does to your money over time. If you would have had $20,000 in the year 2000, you would have about $10,000 worth of buying power right now. But I'm going to talk to you guys about the value of having cash in a time like this. When I first got started investing, I would go way too heavy on positions, and I didn't have enough money coming in at the time, so I would mess around with my portfolio too much. The beauty of having cash is that you don't need to mess around with your portfolio. Let's say a certain stock goes down and you still love the company, the fundamentals are still intact. Then what you can do, because now you have cash, is you can just average down. Or scenario two, let's say that you see a better opportunity in another stock and you don't have cash, so you end up trying to sell your stock and mess around and move stuff around too much. But when you do have cash, then you can just take advantage of that opportunity without touching your portfolio, unless you want to add more. In a bear market, psychologically, that becomes very hard to do when you don't have cash on the sideline. Averaging down is a great strategy if the fundamentals of the business are still intact. Obviously, you never want to throw good money after bad. So the way I'm moving in a market like this is, until October probably, I'm only contributing 30% of what I want to contribute to the market. I'm not just going to go all in on NEO because I see it going up. We can have a correction anytime soon, and the people keeping cash will have the opportunity to take advantage of those deals. So my strategy might change around October probably. None of this is financial advice, of course, but make sure that you're evaluating companies. Maybe watch my how to value a stock video. Do your research and come up with a strategy, but one thing's for sure, it's important to have a little bit of cash on the sideline. Thanks for watching. Make sure you like and subscribe. If you guys want to see more videos like this, let me know.